Hello, once again, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Thank you once again for tuning in and watching. Before I get into this week's statistics from across the country, let me just start with some headlines, some news headlines. These are from the past 12 months, and in no particular order, let me get into them, and we can kind of build a theme here. Vaughan fire destroys 40 townhouse units under construction. No injuries reported. Multiple homes destroyed in large fire in New Oakville subdivision. 4 unoccupied homes in Richmond Hill caught fire Thursday. No one injured after massive fire destroys 8 homes in Burlington. Massive fire destroys several $2 million houses under construction in Vaughan, Ontario. House under construction in Woodbridge catches fire overnight. Okay, so I'm guessing you've recognized the theme here. Let me just go through the last few and then we'll break it down and take a look at the data. Fire destroys homes under construction in Barhaven. Suspicious fire in Aylmire. Fire destroys a Brantford home under construction. Massive residential fire consumes 4 homes in Hamilton subdivision. Suspected arson causes $4 million damage to 2 new homes in Amherstburg. And multiple homes under construction set ablaze in Brampton in July, police say. So it would appear that there has been an unusually high frequency of fires in new home construction projects in Ontario and other parts in Canada, but I'm just focusing on Ontario right now. So let's look at this in table format to see if we can see any trends in this data. So here they are in reverse chronological order. The most recent one in Vaughan just last weekend, 40 townhomes, and it's under investigation. You can see here all the causes. Most of them are still under investigation, but for the ones that we do have the cause of the fire, there's 2 arsons and 1 improper welding. That was in Oakville. I have them all broken down here, obviously, in the table. I have the times and the dates. Many of them were in the early morning hours between 3 and 4 a.m., but I think it's about 8 out of 12 or 8 out of 13, about 60 to 65% are in the midnight hours or after midnight hours, I should say. I would say this is a very suspicious trend we're seeing. Lots of new homes are going up in flames. Of course, the market's going up in flames too. But is this just a coincidence, or are people actually intentionally setting these fires to get out of these pre-construction deals? Let me know what you think in the comments. But I think that there is a lot of talk out there and speculation that, these could be fraudulent or purposely set fires for those reasons. After posting this on my X or Twitter, the biggest comment I got was climate change. Obviously, people are being smart. Forest fires start due to climate change, supposedly. And of course, they're blaming this on climate change. So that was the biggest comment I got on X. But again, if you have anything further to input, or if you know of any other fires, let me know and I will add it to this table. And we'll keep a running update of these fires as we go. Okay, now moving on to the data. This week, I don't have all areas in Canada. I have the usual suspects I'm leaving out because I don't have the data, so don't get angry with me. I know the Ottawa people are always upset that I'm not reporting on Ottawa, but their data is not out as of this video, and I'm recording this video on the same day I'm releasing it. Same with the Montreal and Quebec. Their data wasn't out either today, and a lot of the Eastern Canada or all of the Eastern Canada don't release theirs either. So I will report on that next week, but let's look at all the areas we do have so far for this week. Starting with the month-over-month price change from September to October, Guelph leads the way or leads the declines with 10% drop from the previous month. Then you have Lakelands and Muskoka area, Peterborough, Kawarthas, 5.7%, and it goes down the list. Victoria, Oakville, Milton, York, Brantford, London, St. Thomas, Windsor, Essex, and we're all starting to get into the 1% losses now, not significant, more of flat markets. So that would be Toronto, Fraser Valley, Hamilton, Burlington, Kingston area, Calgary, Kitchener, Waterloo, and my area, Niagara region. Then you start getting into the price increases month over month. Places like Greater Vancouver, pretty much flat, but a small increase. Grey Bruce, Owen Sound, Edmonton, Greater Edmonton area, Durham region, Saskatchewan, Peel region, Cambridge, Woodstock, Ingersoll, and Barrie and District all had month over month increases. Now let's look at the percent losses from the peak. No places are up. Every place is running at a loss that I'm reporting on today anyway. Cambridge has the biggest loss, 27.4% loss from the peak. That's pretty significant, almost 30% there. Windsor and Essex next in line at 26.4, then Southern Georgian Bay just over 25%, Durham region 25% or just under 25%, London St. Thomas in that 25% range, Woodstock Ingersoll 24%, Kitchener Waterloo 23%, Peterborough Kawarthas 23%, and you go down the region in the low 20s, Niagara region, Hamilton Burlington, Fraser Valley, Brantford, Guelph, Oakville, Milton, Kingston and area, Peel, Lakelands, Berrien District, Grey Bruce Owen Sounds. It seems like the majority of the places now are in that low 20% loss range. And then under 20%, you have York region at 17.4, Victoria at 12.2, Toronto just under 10%, Saskatchewan 6.6, Edmonton 5.7% loss, Greater Vancouver down to 2.3% loss, and Calgary faring the best at just under or just over 1% loss from the peak. Now looking at that in dollar terms, Oakville and Milton, $324,000 loss in the peak. So some huge losses there. They are at a higher price point, but still some pretty big losses, followed by the Durham region at $307,000. Cambridge is pretty big for the price points in that area, and that's why they did lead the way when it comes to percentage losses, but they're at $287,000 below the peak on average. Southern Georgian Bay 286, Fraser Valley 286, York $271,000, Peel $267,000, Kitchener, Waterloo, and Hamilton, Burlington both at $235,000 losses. And the list goes on. Guelph, Lakelands, Woodstock, Ingersoll, London, St. Thomas, Peterborough, Kawarthas, Brantford, Berrien District, Niagara region, Windsor, Essex, all down almost 200,000 or just over for some of those regions. Once you get into the $150,000 losses, you're at Grey Bruce Owen Sound, Kingston and area, Victoria 133,000 down from the peak, Toronto 121,000 down from their peak. Greater Vancouver, Saskatchewan, and Calgary, 20 to 30,000, depending on the area. Actually, Calgary only $7,000 from the peak. Looking at the sales to new listings ratio to see which places are in buyer's market and balanced market and whatnot. So you can see in the buyer's market, almost half of the areas are in buyer's markets. Peel, Southern Georgian Bay, York region, Berrien District, Toronto, Durham region. Pretty much all of the GTA is in a technical buyer's market when it comes to the sales to new listings ratio. Oakville, Milton, Niagara region, Hamilton, Burlington, Kingston and area, Victoria, Fraser Valley, and Cambridge. In the balanced market areas, Windsor, Essex, London, St. Thomas, Brantford, Greater Vancouver, Guelph, Woodstock, Ingersoll, Grey Bruce, Owen Sound, and Kitchener, Waterloo, and the Lakelands. And then in the sellers markets, we have Edmonton, Saskatchewan, Peterborough and the Kawarthas, and Calgary. Now, just a quick update on the bank sale info. They have been consistently rising. They are still higher than they have been in any other weekly period so far this year. When I check about every 3 weeks. So here's the ITSO bank sales. This is the areas or the 20 boards surrounding the GTA. And you can see we're about triple from where we were earlier on in the year. We always kind of hovered around 20 listings that were bank sales, and these are active and conditional listings. And we're now just under 60. They have been consistently rising since the beginning of the year. And the Toronto Real Estate Board, my data doesn't go back to the beginning of the year. I just started tracking this mid-year or around May and June when I became a member. But they have been consistently rising also. We're 160 now or 165 where we started. When I started tracking, we're about 95 or 90 or so. And lastly, I just want to compare the trends when it comes to the list prices and the sales of the list prices and the months of inventory. So we're going to start here with this first chart. This is the sale price going back to January 2019. I wanted to go back just before the pandemic, so there's not too much data, but that we do have some data prior to that. And you can see that as the months of inventory dropped, the prices went up. So there is definitely a relationship there. And we can even go back or go forward, sorry, here to the January 2023 part of this chart. And you can see the months of inventory dropped at the beginning of this year and the sale prices did increase. So there is a correlation or an inverse correlation, less inventory, higher sales prices, which makes sense. But then I started thinking, is it only the inventory or could the sales affect the sale prices? More sales, higher sales prices and vice versa. So I looked at the sales to price ratio here. And of course, there is a relationship between the sales and the prices. As sales start to increase or demand increases, the price goes up and vice versa. When the sales decreases and demand decrease, the price goes down. So now the question remains, and please share your thoughts in the comments as always. Does the supply or the demand influence the price more? Is it an equal share? Is it one over the other? So we see both seem to move, but is it the supply or is it the demand that affects the price? And I think that's a pretty good question. And there's probably going to be some pretty good debates on this. I would probably lean towards the demand or the sales has a bigger influence because when sales increase, months of inventory will decrease. And of course, the price goes up. When inventory decreases, price increases. And when sales increase, price increase. So I would say that the months of inventory reacts to the sales. So the sales is the ultimate driver of prices and the months of inventory. Anyway, let me know what you think in the comments. But until next week, I'll see you then.